Hey everyone, welcome back to Corporate Decoder. Today WMG just filed an 8K announcing key leadership changes, and I am seeing a shift that might surprise you. Quick note, this is not financial advice, just my take on public filings for educational purposes. The music giant is shaking up its top financial and operational roles, and we will dig into what this means for their future. Alright, so Warner Music Group Corp, ticker symbol WMG, has officially reported some significant executive changes. This isn't just a minor shuffle. We are talking about the top financial and operating officers stepping down. Let's get straight to it. On the 31st of July, Armin Zerza, who was both the Chief Financial Officer and Chief Operating Officer for Warner Music Group, stepped down. The company states it was for personal reasons. They've also announced they're already looking for a new Chief Financial Officer. This is a pretty big deal when two key roles are vacated at the same time. Now, to fill that critical CFO gap, they've appointed Louis Dickler as the Acting Chief Financial Officer, effective the same day, the 31st of July. Now, here is an interesting piece of history. Mr. Dickler isn't new to this role. He previously served as the Acting Chief Financial Officer from late 2021 into early 2022. This was when a former CFO took a temporary leave for medical reasons. So, he is familiar with the company's financial operations during a transition period. Mr. Dickler is 48 years old and has been with Warner Music Group since October 2011, holding the title of Senior Vice President, Global Controller, and Chief Accounting Officer. He started his career at KPMG, a major accounting firm, before joining Warner Music in 2005. Importantly, he will continue to perform his existing duties as Senior Vice President, Global Controller, and Chief Accounting Officer while acting as CFO. The filing also assures us that there are no unusual arrangements or family ties connecting Mr. Dickler to other executives that would require further disclosure. Alongside the CFO change, Tom Corson has been appointed as the company's Chief Operating Officer, also effective the 31st of July. Mr. Corson is a well-known figure in the music industry. He is currently serving as co-chairman and COO of Warner Records, and will continue in that role for a transitional period. Mr. Corson is 66 years old and has been in his co-chairman and co-role at Warner Records since January 2018. Before that, he had a long career at RCA Music Group, where he rose to president and co-o. His career in music began even earlier as an intern, and he has a business and economics degree from UCLA. He has held marketing and executive roles at various major labels like A&M Records, Capitol Records, and Columbia Records. Similar to Mr. Dickler, the filing confirms no special arrangements or family relationships related to Mr. Corson's appointment as COO. Now, what is really interesting is what this filing isn't detailing. There are no financial statements or updated exhibits attached to this specific report, beyond the standard cover page interactive data file. This 8K is purely about the executive changes. However, we can look at the broader context of Warner Music Group's recent performance and market position. The company has a market capitalization of around $13.5 billion with a price-to-earnings ratio of about 30.9. Their stock has been trading in a range of roughly $23 to $35 over the past year, currently sitting around $25.96. They employ about 5,500 people. Recent news indicates a mixed sentiment. Some brokerages are giving them a moderate buy recommendation, while other reports from late July pointed out that the stock was down around 5.6%, with some suggesting it might be undervalued. They also recently reported their fiscal second quarter results for the period ending the 31st of March, looking at institutional ownership. Major players like JPM Morgan Chase, independent franchise partners, and BlackRock hold significant stakes, indicating strong institutional confidence. What does this leadership change signal? Often when a CFO and COO step down simultaneously, it can point to a strategic shift, a disagreement on company direction, or even pressure from investors. With Mr. Zerza stepping down for personal reasons, it leaves room for speculation, but the immediate appointment of an experienced interim CFO like Mr. Dickler suggests a desire for stability. Mr. Corson's move into the COO role, while continuing his label leadership, could indicate a focus on operational integration across their music divisions. The key question now is what is next? Will the search for a permanent CFO bring in someone with a new vision, perhaps focused on cost-cutting or strategic acquisitions? And how will Mr. Corson's expanded role influence the company's operational strategy and its relationships with artists and labels? The music industry is constantly evolving, and leadership stability, or sometimes deliberate change, can be crucial. For Warner Music Group, the challenge will be to navigate this transition while continuing to deliver strong financial results and capitalize on the growing music streaming market. The fact that they are looking for a new CFO suggests they might be open to fresh perspectives. And Mr. Corson, with his deep experience in the label side, could bring valuable operational insights to the broader company. The risk I am watching is how this leadership transition impacts the company's ability to execute its strategy and maintain investor confidence, especially given the mixed signals from recent market performance and analyst ratings. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, give it a like and subscribe for more. Hit us up in the Discord too.